Ferrari. Time to go deep dive with a Ferrari analysis. In this report, unedited, unscripted, it's a request for one of my members. You're going to get live right now Ferrari news, latest news from their earnings. Also, Ferrari gains after attracting a bull rating from Deutsche Bank. What about our full AI software? We're going to run it through the software and we're going to give you all the factor grades. Is that enough? No, it's not. We're also going to give you how it compares to the S&P and how regularly it pays out a dividend. Is that enough? No, we're going to go even further. We're going to show you how it stands up on the balance sheet. This is very important. We're going to see who's buying, who's selling, how it compares with other competitors, what the balance sheet, the financials look like, how much debt does it have, what the intrinsic valuation is. All of this is coming up on this review. It's done live, unedited. Is this a stock you can buy to make money? Is it going to go up? Or is it going to crash? We are going to go over the numbers. So before you get too excited and start spinning around in your car outside, we're going to find out if this business makes money. We're going to study the numbers. How is it affected by tariffs and trade? What about inflation? Has that impacted the stock? Well, we're about to find out, is this a business you can make money on? Is it an opportunity to make some money, some serious money? What do you think? Well, we're going to find out now as we go deep dive into Ferrari. Welcome to the show. It's lovely to have you here. If you haven't yet tapped the like button, please do tap the like button. That really, really helps the channel. And consider subscribing. If you are a member of our channel, the membership link is below. I'll also put it in the chat for anyone watching live right now. If you are a member, you can book an earnings like this, an analysis like this immediately. I had one of my members watching the show and he wanted it done straight away. So we literally stopped the show and went straight into this deep dive analysis of Ferrari. So there you go. Okay, let's get straight into it. Now let's start nice and simple. Ferrari. We all know what Ferrari is. Ticker symbol RACE. The chart looks amazing. It looks very much like the S&P 500, but does it perform as well as the S&P 500? Well, that's the chart. Let's read the basic information. Ferrari NV is a holding company which engages in the design, engineering, production and sale of luxury sports cars. The firm's model include the F12 Berlinetta, I apologize for pronunciation, 488 GTB, 488 Spider, the 458 Special, California T, the LaFerrari Hybrid, LaFerrari and FF4 wheel drive. It participates in car racing such as Formula One. The company was founded by Enzo Anselmo Ferrari in 1939 and is headquartered in Morello, Italy. The listed name for race is Ferrari NV. The CEO, Benedetto Vigna. If you'd like Benedetto on the show, we can get him on the show. We have a Meet the CEO series. All you do is email investor relations, tell them that you are an investor, and we will reach out to them and say that we have 102,000 subscribers who are interested in Ferrari, and we often rank #1 for the stock, more than they do, in fact, when we cover this. If they respond to you, which they will, because it's too good information to share, to miss, they will contact you and eventually you can put them in touch with me and we can have the CEO live on the show. This company, which is a public company, founded in 2016, but the brand has been around for a much longer time than that. 5,435 employees. Very, very small company. If you are buying on margin, it's regarded the same risk as the S&P 500, 25%. Maintenance ratio, pretty good, right? I've got 58 grand. Maybe I should buy some. I don't know. Find out in a minute. Low volume, very low volume. People just own it. They don't trade it. They just own it. Very small club, a select club. Not a lot of people pay attention to things like this, but it's as you can see from the chart, it does look interesting, right? So 311,000 is average volume. People just buy it and own it. That's what you want with a business, right? Market cap, 119 billion. So it's not small, but people just own the business and never sell it. Now, Price to earnings ratio, 49 times earnings. Very expensive. Well, you expect it to be expensive. It's Ferrari. It's not just the cars. It's the whole brand, the bags, the coats, the shoes. I mean, it's everything, really. You buy a hat and it's $100. All right. Everything with Ferrari is premium. A dividend, it pays out a premium. It's hardly that important, but it's nice to know, though. 0.66%. You don't buy it for that, you buy it for growth. Bit like the S&P 500. Now, it's expensive, but when you compare it to things like Palantir, 1,000 times earnings, or 700, 800 for Tesla and things like that, it's actually not that expensive, is it really? If you want to put it like that. But we're not going to put it like that, are we? We're going to go into a deep dive. What do the bulls say? Now, I don't care what they say here because they are paid to say these things. I do my own analysis, but we'll have a look at it. So Ferrari's strong geographical diversification with limited exposure to China supports the continuation of of resilient results relative to most of the luxury sector. Richemont, LVMH and Kering have at least 20% of sales sourced from China. Not going to read too much on that because there's a lot to cover in this review. What do the bears say? Well, the bears say volume growth is kept tight, thus operational leverage is reduced slowly. A mismatch between market expectation, valuations and bottom line growth causes share price volatility. Don't see that from the share price so far. But anyway, from what I saw, an initial look, I would say that's a lot of nonsense. But anyway, there we go. Robinhood investors have been selling recently. Well, Robinhood are retail. I have no interest in what retail is doing with a stock like this. This is people that buy and own, and people that buy and own don't sell, and they don't tend to be retail. They tend to be corporate, they tend to be institutions and just own it forever. So retail, Robinhood, they've been selling. Pay no attention to that. It's very small. It looks very small anyway. Hedge funds. There you go. The very opposite. You see, after 4 years, I know before I click on it what I'm going to see. What did I just say? Hedge funds, Wall Street managers, I talk to these people all the time. This is a buy and own. Retail investors do not understand this stock at all. It's up, it's Ferrari, let's take some money and buy Bitcoin. You don't sell Ferrari, you own it. And there's the proof of it. Hedge funds, people I talk to, buy and own. And I made that prediction before I saw it. So I pretty knew that one. Insiders. Insiders have been buying back in February and haven't been doing anything since. Great. Insiders buy and own. Again, this is what you want. Don't care about retail investors. This is not for retail. This is for institutions. This is for a very private, it's public, but it's virtually a private business. No one pays much attention to this, but perhaps we should. All right. So those little red blips is very small tax selling. Nothing at all. So a wide economic moat. What does that mean? That's the margin. That's the profit. So they can reduce they're not going to. Ferrari's not going to go on a discount. It's a premium product. It will never be reduced. Their margins are always massive. Fair value. The fair value of this business is $444. We're at $477 now. We're always going to be over fair value. Uncertainty, medium, and stewardship, management. In other words, exemplary. No surprise there. Always beating on earnings. This is what you want to see. Keeps on going up, doesn't it? Keeps on beating on earnings. I don't see any reason why it wouldn't from my recent analysis I did about a year ago. So that's the basic start. Shall we go further in now to Ferrari and see what we discover? What do you think? Is this a buy or sell? Tap the like button if you like this so far. Consider subscribing, become a member, and you can have a review just like this. All right, let's now look first of all at the last earnings call. This was back in July the 31st. We've got another earnings call coming up soon. If anyone of my members does a super chat, we can cover the earnings for you, whatever time it is, and report on the latest earnings. And it will go in our playlist for Ferrari, so you can follow all the information. Ferrari GAAP EPS of 2.38. That is, of course, in billion, and that of course is Sorry, I beg your pardon. That's 2.38 earnings per share. And that is in euros. I beg your pardon. Euros. Revenue of 1.79 billion euros. We're looking at euros now, not in dollars. The revenue is up 4.7 year to year. Things keep improving. Ferrari shipments total 3,494 units. That's it. It's all the cars they shifted in that period. This is not a Ford or a Tesla. All right, this is premium product. 3,494 units in Q2 25, substantially flat versus the prior year. I don't need to look too much of that. I'm now going to switch over to this latest news. This was out just 20 days ago at the making of this video. Ferrari gains after attracting a bull rating from Deutsche Bank. Okay, Deutsche Bank regarded Ferrari as a buy rating on Tuesday. This is like 20 days ago, 2 weeks ago, or thereabouts, 3 weeks ago, ahead of the automaker's Capital Markets Day in October, during which it is anticipated to unveil ambitious midterm targets, including adjusted EBIT margins potentially exceeding 30% and a 3 billion share buyback. Wonderful. When a company makes money like this, it doesn't require, this is what I like about a business like this compared to Bitcoin or a crypto. It doesn't require anyone to buy the stock. They just keep making money. And as they make money, if the stock is just flat for a while, they'll buy their own stock back, thereby doing the very opposite of diluting stock, making it more rare, so shares naturally go up. And it just shows you the belief and the quality in the management to do that. It's great. Now, of course, Warren Buffett doesn't like buying shares back. He only buys back when it's undervalued. Apple like to do this. It's a good marketing thing to buy back, but what else are you going to do with the money? You're not trying to ramp up. You're not trying to sell 1 million cars a year, and you've got so much money sitting around doing nothing. What do? You buy more shares. Simple. You buy the shares back. That way, the price goes up. It's a perpetuating business, this one. I like it. I've always said this is a great business to own. So beyond CMD, we believe investors focus will increasingly shift to 2026 and the full impact to the new F80 supercar. The F80, with its significantly higher price point, is a major catalyst, highlighted analyst Nikolai Kempf. We estimate the single model could generate over 450 million in incremental earnings, dwarfing the outgoing Icona Daytona SP3, he added. Crucially, Kempf and his team think the substantial earnings upside for Ferrari is not yet factored into consensus estimates. Deutsche Bank sees the positive news flow from the CMD and consensus earnings upgrades of 5% for 2026, helping to support the bull thesis on Ferrari, which already includes strong conviction in Ferrari's sustained growth and superior profitability. It's all about the margins on this business. All right, I will come back to the AI model at the end. I'm going to look at the factor grades. Now, valuation, FFF, it's not gone up, that's not changed. It's expensive. Valuation will always be expensive, but as you've seen from the chart, it just keeps on going up over time. Looks like the S&P, and in a minute we'll compare it to the S&P. So it just keeps on going up. So if you buy at a high, a year later you're up, you don't really care, right? As long as the business keeps making money, the valuation can grow into it. Now, that's not the way I like to invest. I like to buy when we are undervalued, but premium products like this, you may never get to buy it undervalued. It's just the way it is. Growth, well, that's up from C+ to B-. Growth, the company is growing. Profitability, A, doesn't get much better. Momentum, C+, slightly down from B+. Revisions, B+, slightly down. So it is a little bit expensive at the moment. Wait for a dip, perhaps. We got a bit of a dip today, maybe. What about the short interest? None. This is what I like about this. Retail pay no attention. They're too busy buying Bitcoin. No one's paying attention to this business. No one's shorting it, and which is incredible, really, when you think how expensive it is. But no one is. Great. What about the forward PE? The forward PE is 45 times earnings. Now that's important. The forward PE is about the growth. The lagging indicator displayed on Robinhood is 49. So you can already see it's not as expensive as you think. 49 times earnings, actually with the growth projected, is 45 times earnings. That is not a bad price for Ferrari. It's expensive, but it's growing and it justifies the increased price. We like that. Now what I want to do is look at the dividends. Now the dividends aren't really important. No one buys it for a dividend, but it's kind of nice. Now what we're looking for is a dividend ever increasing and always paying out. Thereby it becomes a dividend aristocrat, then a dividend king. Like my favorite, Coca-Cola. Is it indeed a dividend king? Well, no, it's not. It's not been around long enough. But is it always paying out? Is it always increasing? It started in 2016. We've got about 9 years of history here. So we're getting there. 46 cents, 63, 71, 103, 113, 86. That could be a correction year. 136, 181, 244, 298. So the answer is yes. Always paying out. Other than one, it's increasing. That could be a correction year. So we are doing well here on dividends. But that's not why you buy the stock. But, you know, why not? You know, it's not too bad, right? And these are annual, remember? These are annual. If you were getting that every quarter, you're like double the S&P 500. You're not. All right? This is an annual dividend. So it's interesting, but not why anyone buys it. Now, what I like is this. How does it perform against the S&P? Now, when it went public was 2016, so that's 9 years ago. If you put $10,000 in Ferrari, over a 10x, nearly 11x. Very, very good. 107,000. $10,000 in the S&P, merely 4x over that period of time. So it's a winner against the S&P. The S&P is in green, Ferrari is in blue, and you can see it's basically performed even through COVID. Look, COVID had a downturn, Ferrari hardly noticed it. Look at that. That's important. That means it's a solid business. It's not affected by macro conditions, wars, terrorism, pandemics. People will always buy a Rolex. They'll always buy a Ferrari. And on it goes. There's always going to be people in the world at the top who want a Ferrari. The brand is solid and it just keeps making money. This is a very nice stock to own. I'm talking myself into it, aren't I? All right, so it outperforms the S&P, continually outperforms the S&P. What can you say bad against it? Well, let's look at the balance sheet. The balance sheet. What is the intrinsic valuation? The intrinsic valuation will always suggest in a stock like this overvaluation. Yeah, $173. Euros, I beg your pardon. Overvalued by 57%. Now, I've always said, and you all know that I say you can pay 25% overvaluation for a high-performing stock. However, this is not a high-performing stock. This is a brand. This is a luxury brand. You're never going to buy this under value. So you just can't. You're never going to get this under the value. It's like a Rolex. It's so elite. It's so premium. It's a very different product altogether. You can't use intrinsic valuation as your metric to buy this. What you can do is look at growth. Well, it just keeps making money. Continual, steady, no dips. This is the very epitome of a business that I like to own. This is what buying businesses is about. Solid business. Operating income up 2%. Net income up 1%. Free cash flow up 9%. Operating cash flow up 3%. Now, if you like the software that I'm using, it'll also give you a lot more detail. You can click on these, open them up, compare to other software. You should get the software that I'm using. I know the CEO personally, and you can get a deal better than CNBC, Bloomberg, because I give all of the benefits to you. There is Seeking Alpha and Alpha Spread. In the chat, it's also below as well. The discounts are so good, you can basically get my membership for free. It's that good. All right? Free trials, discounts, you name it, in the chat. I'll also post it below. So all of this looks great, doesn't it? Great. Absolutely great. What about a balance sheet? Now, balance sheet is the health of the business. 9.7 billion assets, 1.5 billion in cash. I like that. I don't like a business with tons of cash sitting around. That's just a pointless, that's just a rubbish business. You want a business who invested cash, made money from it, and that's what you buy, the business, not just a pile of cash. I've seen some things like, it was DWAC, was it Donald Trump's thing? It was just a bunch of cash in a box, in a tin on a shelf. Don't make anything, doesn't do anything, and everybody, oh, this is amazing. No, I hate businesses like that. I like a business which has cash, but not piles of cash. There's no point. 9.7 billion, 1.5. That's what you want. Now, what's the liabilities? Long-term debt, 3.2, no short-term. 3.2. Now, you go, well, they've got debt. Out of nearly 10 million, they've got about 3.2 billion in debt. About 30%. Is that a problem? Well, they've got 1.5 billion in cash. They can wipe out 50% of the debt tomorrow. So they've got a bit of debt, but they believe it's beneficial to hold the debt. And as interest rates come down, which they will, this business will have a catalyst. It will save money. Like I'm saving money on my borrowings right now, margin. So will Ferrari. They'll make more money because their debts are coming down. So this is a catalyst when you've not got too much. So I'm okay with this. It can pay off half its debt tomorrow if it wants to. It doesn't want to. It doesn't mind having that debt. It doesn't matter to them. All right? Gross margin. Now, this is what Ferrari is all about. 51% is the gross, but what's the net? Net margin, 22%. That's, in other words, what the float, the moat, your buffer, because not that Ferrari ever reduced their prices, but they've got a margin, they've got a moat around them of 22%, so they can always make money. FCF margin, 19% ROCE. Now, if you don't know what these terms are, you can click on them and it opens them up. If you use my software, you can then compare other stocks, other metrics side by side. And this is like, what, $5 a month, this software? It's like with my discount, I mean, it's phenomenal. Everyone should have Alpha Spread. Seeking Alpha is very expensive. I know it's a pro plan, but this is Alpha Spread you're looking at here. Everyone should get this. This is like $5 a month with my membership. It makes my membership for free. Every one of my Lucas aides should have Alpha Spread. I've done such a good deal with the owner, the CEO. Everyone should. Profitability is 69%. Great. It's not bright green. It's not a software company. It's a car company. But when have you seen a car company like this? Now, in here, you can compare to Tesla. I don't know, but I'm pretty sure Tesla doesn't make 69% profit on cars. Nobody does. This is great. Solvency. There you go. 76%. I think the highest I've ever seen is like 83. You can't get much higher than this. This is why that debt is of no consequence to Ferrari at all. What are the worst case scenarios? Worst case scenarios, 5% down. Bloody hell. You can buy it and it might be down 5%. Well, that's a bit of a no-brainer. So if I'm buying this and I've got an allocation of 10 grand, I'll put in 8. I'll go 80% in. I'll wait for a small pullback. If there is one, if there's not, I've got 80% and I'll let it go. I'll own enough. If it pulls back, I've got another 2 grand to buy a 5% dip. That's it. Now I'm fully allocated. I'm done. 5% downside, nothing at all. 16% upside. Well, the S&P averages at 10. Output. I should be buying this. This is one for me. This is the sort of business that I would buy. But I try to keep my portfolio just simple. But this is a simple one for me. This is a buy. 100% buy. I might buy a few shares actually. I wouldn't mind owning a bit of Ferrari. 16% upside. Put in the chat, tell me if I should buy this, yes or no. So what about the upside? 42% upside. Well, a solid business like this, wow. 100% buy. 100% buy. What can I say? Let's run through the analysis now, the AI analysis. That was alpha spread. So I'll give you the link again, alpha spread. If you want seeking alpha, that's where we're going now, what I showed you earlier. And I've got an AI model here, which I'm going to run through. Okay, so here it is. This is going to give us our final piece of the puzzle, whether you like this or not. Have you tapped the like button so far? Have you considered subscribing? And do you think that this business can make you money? Well, I've said yes. It's a definite buy. Inflation is not an interest to them. Tariffs doesn't affect them. They can pass it on. This is the sort of thing that I like. So let's go back to our final piece here. So 45 PE, and I think we said 42 going forward. So the PE is pretty good. We don't need to read about the company description. If you want to pause it there you go. You can read it. No idea when people say you can pause it. They go into like a frame still picture. I don't know why people do that, but there you go. I do it the same. I am as mental as everybody else. There you go. There's a Ferrari. We don't need to read any more about it. This is competitors and unique value, because there's not just Ferrari, of course. There's Lamborghini, Porsche. What about how it stacks up? Well, Ferrari's Aston Martin too, but they're a private company. What about Ferrari's unique value proposition lies in its unparalleled brand heritage. It is. A Ferrari is a Ferrari. It's not a Lamborghini. It's not a Porsche. They've got their own brands, of course, but a Ferrari is a Ferrari. It's like an iPhone. You can't. How do you compare an Android Google phone to whatever Samsung to an Apple? You can't, can you? They're different. Apple's iconic, so is Galaxy. All right, so it's got its own brand heritage, scarcity, driven exclusivity. That's it. It doesn't need to sell many cars, and strong pricing power. Its business model emphasizes deliberate production limits and personalization options, ensuring high margins and customer loyalty. The company's deep integration with Formula One racing provides continuous innovation and brand visibility, further enhancing its competitive edge. Now, I showed you the factor grades earlier, but now I'll explain what they actually mean in more detail. So, valuation. Valuation is significantly stretched, with a price ratio of 10.18 compared to the sector of 0.96. Well, what's the sector? Cars? Well, how can you compare it to Ford? You can't. It's like comparing a Rolex to a Casio watch. Of course, you can buy a cheaper watch. It's not the same thing, is it? Indicating a very expensive stock. Additionally, the price-to-book ratio of 19.91 is notably higher than the sector median of 2.18, reflecting a premium valuation. It is. But as you've seen, retail don't buy this. They don't get it at all. I showed you at the beginning. Hedge funds buy it. Owners buy it and own it. That's it. No one trades it. They just own it. So you can't really go wrong with this. They're not going to dump the stock. This isn't going to get shorted. No one's going to sell it. People are just going to own it forever. This is a solid business. I love businesses like this. It's premium. Growth. Race shows robust growth with full revenue growth of 12%, significantly higher than the sector's 3%. That's what you buy, isn't it? The strong growth trajectory underscores the company's expansion and financial performance. Profitability. Race boasts outstanding profitability with a net income margin of 23%, which is considerably higher than the sector median of 4%. It's not even close. This highlights the company's efficiency in converting sales into profit. That's what you buy a business for. This is the very definition of a great business. The very opposite to what a crypto would be. Speculative, doesn't produce anything. This is a very, very, very good business. Momentum. The stock momentum is weak with a 6-month price performance of negative 3%, underperforming the sector of 2%. This indicates bearish sentiment and a declining stock price. If we look at the stock price though, over the week, it's down 1.73. It's flat on the month, 0.99. Past 3 months, it's 5.2. So when they talk about a declining price stock, it's done 13% this year. It's in its range to buy again. It's not at the bottom, but it's trending down. This is not a bad time to buy. There's better prices if you look at the 1 year, if you'd bought it here or here or here. But, you know, this is why I say if you were going to put an allocation to this, put 80% in and buy the rest when it goes down. But you look at the 5 year and then all of a sudden you realize outperforming the S&P. I'm talking myself into buying this and I didn't want to do that. Naughty Brian. That was not the idea. You're going to get me to buy it, aren't you? Anyway. Revisions. Earnings revisions are mixed with 2 upward and 6 downward EPS revisions in the past 3 months. Additionally, there were 3 upward and 13 downward revenue revisions, indicating a cautious outlook among analysts. So, in summary, while Ferrari demonstrates strong growth and profitability, its high valuation and weak momentum, along with mixed earnings revisions, contribute to a hold rating. This suggests that the stock may perform in line with its sector peers. So, there we go. I hope you enjoyed this review. If you are a member, for minimum $10, you can book an earnings review like this. That's what's happened here. So Brian said, I want it straight away. He didn't know he was going to get it straight away. But when you do a $100 super chat, that is what you get. You get it straight away. And that's what we did. We did it straight away. So I'm going for the chat. Let me see if I've got any comments or questions. I don't see any. I love Ferrari, but need Lamborghini as well. Says Space, Songs for Space. Can't buy, says Song for Space. Buy, says Avix. Everyone's going buy. Loads of new people in the chat. I'm noticing in the chat here. Let me put some of you on the screen. Buy says, we got a lot of new members here. A lot of new guests, sorry. Consider becoming a member of this channel. We have 98%. We're like Ferrari. 98% of our live viewers are members, more than any channel in the world. We are going to be the first channel to get to 1 billion subscribers. We got to 100,000 faster than Mr. Beast. There's the silver plaque, which is shining red now for Ferrari, because we did it by going live and we did it quicker than Mr. Beast. The gold plaque to 1 million will be here within 2 years. I've already scheduled it on my upcoming live streams, and then we'll be the first channel in the world to become a billion. So if you are a Ferrari investor and you want to be part of an exclusive club, join us, become a member here on the channel. There is a link in the chat. Many, many perks. You can call in, be live on the show. We have CEO interviews, you name it. How come you can't buy Robinhood? You can. I can buy. I'm looking at Ferrari right now on Robinhood. Didn't Ford beat Ferrari? Pretty sure there was a movie. Chris Carpenter, I don't know about that. No idea. Can't see how that would happen. Maybe Hood wants trade stocks, not hold stocks. Maybe Hood wants, I don't know. I mean, at the end of the day, oh, hang on a minute. We've got Ollie Gunderson in the chat giving memberships away. One of our members, Ollie Gunderson, is buying viewer guest memberships. So there are 5 of you: Trevor Smith, retired Merce, Gilbert Rogers, Mac, and Cracker. You have just won memberships. If you now upgrade using the link here to Electrum, that's our most popular membership, we have weekly events where it's private events, weekly events for our Electrum and Upwards members, which is gold, platinum, and investor level. We have interactive game shows, trivias where you can learn about stocks. So if you upgrade now, you're basically upgrading for free because your membership, your bronze membership, has been paid for you by one of our members here, Ole Gunderson. So upgrade now and you can get Electrum for basically the same price as a bronze membership. What an opportunity that is. One of our members has just bought you memberships. All right, 1960s Ferrari 250 GTO. Yeah, I missed reviews. Well, we're getting back to it right now. Thank you, Martin. I hope you enjoyed it, Brian. This was all for you. Morning, all Bitcoins. Well, much appreciated for the information anyway. Matthew, so he's talking about buying on his other account. What other account? What do you mean? You can have as many accounts as you want on Robinhood. Anyway, seen Porsche. We haven't reviewed Porsche. Maybe become a member is the best way. You won't regret it. Thank you, Denise Brookner. That's very kind of you. Have a great evening, everyone. Keep your eye on for the prize. Finding financial freedom. Thoughts, Volkswagen owns Porsche. Thank you for those. Oh, more members being donated here. You will win one if you've clicked subscribe and you have liked the video. If you've not liked, how many people? Only 33 likes. What's going on? Tap the like button, folks. Okay, there you go. I can't buy on it. I've no idea why you can't buy on Robinhood. Oh, I see. Oh, you're right. You're right. I can now see. Yes, I stand corrected. The stock is no longer supported on Robinhood. You are correct. It was. You could buy this on Robinhood. That would explain why Robinhood investors haven't been buying it. It's not available on Robinhood now. It was. It's not anymore. That's interesting. It's been taken off. It's not on Robinhood anymore. That's interesting. Okay, thank you for that. I was a neighbour of Mark Williams, snooker world champion when I was married. He wrapped his Ferrari around a curb into a tree where we lived. It was a mess. I bet that cost him a few quid. Upgrade to Electrum. Martin always wins trivia. You must stop him. Yeah, that's right. Problem with the EV rollout. Porsche stuffed today. Tempted. Ah, interesting. Cedar Trees, are you Stacy? A shame. Ferrari race is not supporting Robert. Yes, I agree. Songs for Spain. Now that explains it. If you look, Ferrari is not supported. Yes, Matthew, I see now what you're saying. I missed it. Who or what is Stacy? EU account. Ah, that's a point. Yes, my Robinhood in the UK. That's a point. It might be available on the UK. Wow, we can't buy it. Well, let me go and have a look. Okay, well, we do this now. Let me switch to my UK Robinhood. Let's see if it's on UK Robinhood. So I shall log out of my US one. I shall log in to the US one, the UK one. Bear with me a second. Just bear with me. I'm just logging in into the UK account. Got all my passwords and everything else. Right. Here is my UK Robinhood. You can see it's just a very small account. There's just 880 pounds in there. Let's see if race is available in Europe. No. No, the answer is it's not available in Europe either. So in other words, you can't buy it on Robinhood. That's just the way that is. All right. Okay. So there you go. That's it from me. Thank you very much indeed. I hope you all enjoyed this. I'm now going to end the show. It'll take you back to what you missed earlier, which is when we were talking about what's up with that, digital businesses, crypto and the like. Go and check that out. That's it from me. I'm now off to a spin class with Big Ed, the guy who owns all the Amazon in Texas, it seems. And I will see you back in the morning. Thank you very much indeed, everyone who tapped the like button and subscribed. That's it. If you'd like me to do analysis for you like this, become a member and I can do a full analysis like this for you. There you go, Brian. I hope you like it. Click above my head for all the links down below the description. Also here, martynlucas.com/giveaway. We're giving away $2,000 for free to enter, free for all, a little prize to celebrate the channel. If you want to enter, martynlucas.com/giveaway. All right. And you can win $2,000. Let me give you the link in the chat, martynlucas.com/giveaway. It's free to enter, free for all, no purchase necessary. We just feel like giving away some money just because we can. All right. So there you go. Do that. And over here, I shall put the playlist for Ferrari. And down here, I shall put my full playlist of all the stocks I reviewed, about 300 businesses. You can check them all out. And if you can't find it, the one you want, just go down the playlist or search into YouTube, Martyn Lucas Investor, and then the ticker symbol. And if I've done a review on it or anything at all, you'll find it. That's it from me. Until next time, as always, take care of yourselves and each other. Bye-bye for now.